Hi, thanks for joining me on another presentation of a new loan program that's available out there. And this one is called Buy Before You Sell. So why would you use a buy before you sell? Well, according to 2021 NAR profile of home buyers and sellers, this will solve an issue that more than half home sellers face when trying to buy a new home, which is 56% of those repeat buyers use funds from the departing residents for their own down payment. So this will allow a person to buy a home, move into it, and then sell the previous home. So this will allow them on their new home have a no home sale contingency on their offer. Meanwhile, they'll also have a guaranteed offer price and upside protection. They will be allowed to tap into the current home's equity for a down payment and have a mortgage payment coverage. So, contingency buster here. Remove the pending sale contingency from the real estate contract. Offset the departing resident's mortgage liability from the new mortgage with a guaranteed offer from the bridge lender. Oops, sorry about that. So equity unlock, well, it's included in the program fee. We provide a 0% interest equity bridge loan for the down payment. Loan must also be used to make repairs on the departing residence. The realtor and mortgage broker, well, the greater synergy is created between the broker and the real estate agent as they collectively provide selling of the departing residents and the new residents. So they work collectively, get the information together, as well as to help you get prepared for the new home and then be able to sell the old home. And we'll kind of go over this in a moment. So how does this work? Well, first step is we'll get the current property and financing approved. We'll get the guaranteed offer price, which is your safety net. We'll get the current equity for your down payment, and we'll get you a mortgage payment coverage. Once we have all that, we'll go to step 2, which is make a strong offer on the new home, which will have no home sale contingency. So step 3, move in on your scheduled time. You can move into your new home immediately upon closing. And then step 4, you get your full market value when you sell your home. So 90 days to go under contract on the open market after the client closes on their new home. Must list within 10 days of new home closing. So what does that mean? Once you move into the new home, the 90 days will start ticking until you have to have a pending offer from a pending offer. So once you get past that, once you reach that 90 days, the bridge lender with that guaranteed offer will buy the price at that price. Now, what that also means is that they will continue with the sale, with the listing, with that same listing agent until that home is sold, so that way you can get hopefully the higher price. Now that's just more of considered a backup offer, but once they get the other price and it comes in higher, anything over the net proceeds from that, anything over the fees, will go back to the original seller here. So it won't be just, they're not looking to keep anything other than their service fee, which is 2.4%, which you'll see in a bit as well. So what do we need for the approval? On the lender side of here, as a mortgage broker, we're going to collect a full loan application from the home buyer seller. We'll want their most recent mortgage statement and their homeowner's insurance. We'll pull credit and get a signed borrower authorization, and then we'll send it to the lender for their pre-approval. From the agent side of things, we're going to send them a questionnaire, property questionnaire, which will have the listing price, expected sales price, expected days on market, square footage, the rooms, bathrooms, any HOA information. If there's any renovations going on or need to be done, repairs, listing prep, or any expenses to be incurred, agent commissions. Now the property, if it's not yet listed, they'll want at least 10 plus quality property photos, which we'll all send in to the lender, the bridge lender, for their approval on this, along with the pre-approval from the other lender. So let's go ahead and take a look. Oops, sorry about that. So the departing residents here, the home value needs to be estimated anywhere between $250,000 and $2.5 million. It has to be 750,000 square feet or bigger. It has to be at least a 1 bedroom and 1 bath. If there's any lien on the home from solar financing or leasing, it must be fully paid. So to touch on that, it does not need to be fully paid off but we need to account for that payoff in the economic model. So meaning is when the bridge loan lender is in there, when they're calculating everything up, they're going to factor the total cost to pay that off in their model there. So that way, it's by the time we get to close, there won't be any liens left on that property. It will be taken care of. Now, also, not to be occupied by tenants during or after the purchase. Also, no leasehold or outstanding life estates. The trust will be with any trust in there will need to go have a trust agreement to be reviewed on there. Uh, for the new property, we cannot use any VA or financing on there, primarily because their guidelines don't allow this type of scenario, only conventional. So with this one, we can use your regular conforming and high balance conforming limits there. And this is only for primary residence. So if you're leaving the residence, it cannot be on a second home or a vacation home or any investment property. This needs to be a primary owner-occupied residence and also moving into owner-occupied primary residence. So where can these where is the departing residence need to be? It needs to be at least in California, Colorado, Arizona, Oregon, Washington, Florida, or Georgia. The eligible properties would consist of like a single-family home, townhouse, or a condo. And of course, any HOAs on those condos or townhomes, they would require HOAs need to be require any additional approval. It needs to be on less than 2 acres. Must have access to public roads and utilities, so water and electricity. Must be zoned as a residential. Not an age-restricted community. Not a short sale or pre-foreclosure. Not subject to any leases, including tenancy, oil, gas, mineral rights. The departing residents cannot be part of any active new construction community. The incoming residents must have a certificate of occupancy if it is a new construction. And no active foreclosures or BKs. So repairs and renovations. There cannot be any ongoing renovations affecting the bathroom, kitchen, drywall, or landscaping. There cannot be any major defects in or ongoing repairs or upgrades to the foundation, framing, roof, plumbing, electrical, HVAC, fireplace, and chimney. So as for listing in days on market, the property must be less than 100 days on market at the time of lead submission. Property must be approved before 115 days on the market. And the expected days on market is less than 90 days list to pending status. So the bridge, this is what the BBYS or buy before you sell program agreement will look like. So the bridge lender's buy before you sell program agreement lays out the terms of the program, which gives you the maximum down payment, which you're not obligated to fully use. This is a very simple sample scenario here, so you can take a look at. So in this scenario, maximum down payment is $131,250. And then you also got the mortgage payment coverage amount approved, which again you're not obligated. In this scenario, it's up to $12,500. And what is that mortgage payment coverage? Basically, what that means is that you can instead of when you move into a new residence, you're not going to be obligated to continue paying on that old residence, mortgage payment on the old residence. They will take care of that for you. So you're only making payment on one mortgage at a time. We also have a guaranteed offer price that will pay at day 90 if the home is unsold. So this is, of course, at a reduced price from what the listing offer is. It's primarily because they're factoring in a lot of conditions, in there from the commissions, any fees that would be in there, any market movements. They're going to come in a little bit lower. But again, what this is to be treated as is a backup offer. They want you to get more money, which is fine with them. As you can see here, they make 2.4% as their service fee on the sales price of the departing residence. So the bridge lender's backup offer contract will treat the program fee, which is 2.4% of the sales price, as a transaction fee collected at the close of escrow. The additional provisions section will also restate the terms found in the program agreement. So, frequently asked questions. Will the home buyer or home seller be able to qualify for a mortgage on their new home while they still have a mortgage on their old home? Yes, they only have to qualify for the one mortgage at this time, the mortgage for the new subject property. Will the person need to pay both mortgages on their old home and new home at the same time? They have the option to let the bridge lenders to make payments in your current situation. Uh, yeah, I'm sorry. They have the option to let the bridge lender cover the mortgage payments on your current home, interest free until the current home sells. That way, they only need to make one mortgage payment at a time. The mortgage on their new home. So, if they wish, they can choose to exercise this option. The bridge lender will deduct the mortgage payments from the final proceeds from their current home sale. So, as you recall, that mortgage payment when in that scenario is at 12,500. That's where those proceeds will come from. So, what is the guarantee offer here? The guaranteed offer provides a backstop offer on the home seller's current residence in the event it doesn't go under contract. The guaranteed offer price is the amount they will purchase the seller's home for if it does not go under contract within 90 days of the closing on their new home. Sorry. So how is the guaranteed price offer calculated, and when is it locked in? The price that they estimate on the home would sell for after being listed on the open market within 90 days of the closing on their new home, without selling, and takes into account current and projected market conditions. The guaranteed offer price is typically around 15 to 20% less than the current value at the home and is updated every 21 calendar days prior to being locked in. The price is locked in when the client, which is obviously the home buyer, goes under contract on their new home, and it does not change for the duration of the program. What if the home seller needs equity from their current home to make the down payment? The bridge lender will evaluate the seller for an interest-free down payment loan based on the equity in their current residence. Using this loan, they can make a down payment on their new home. They can also contribute additional assets to increase their down payment. What is the rate on the down payment loan? There is no interest payment on the down payment loan. The buyer or home seller will just pay back the bridge lender back for the loan as soon as their current home sells, which will be a service fee. And how they get their money is from a service fee, not any interest used on the bridge loan. So how do you determine how much you'll lend the home seller for the down payment? The bridge lender will lend the client, the home seller, up to the equity they have in their current home, assuming it sells at the guaranteed offer price, less the agent commissions, closing costs, holdbacks, and fees associated with the transaction, such as the program fee and mortgage payment coverage. So, continued. How do you determine how much the home seller is approved to buy a new home? The lender will evaluate the client or the seller if their current residence has already sold for the guaranteed offer price. Can this home seller's offer on the new home be a cash offer? Yes, they will be able to remove not only the home sale contingency, but also the financing and appraisal contingencies with the cash offer if they choose to place a bridge loan cash offer on the new home. Does the home seller have to sell the home to the bridge lender after the current home has been listed within 90 days of the closing on their new home? Yes. Simple answer is yes. They must sell their home to the bridge lender at the guaranteed offer price if it has been listed within 90 days of the closing on their new home and has not gone under contract. Since they will not have approved them to purchase a new home under the assumption that their current home has already been sold at that price. So again, if, for example, you go into a pending situation, you get an offer, let's say day 88 in this scenario here. they'll grant you an extension to close on it. It's just that you need to get an offer in on the property within the 90 days at that point. Now, again, once you reach the 90 days, they'll buy the property. However, the current listing agent on there will continue selling that home. Anything above what the offer, and after that, the net proceeds go back to the seller. It goes back to back to the initial seller. They're just looking for their 2.4 service fees, percent service fees. All they're looking for at that service price. So just give you a heads up on that. So if you guys got any questions or anything else, or we can be of any assistance, here's my contact information. Thank you very much for your time, and I love to hear from you guys.